But let's go across to Kenneth Andrade. He's Chief Investment Officer at Old Bridge Mutual Fund. Kenneth, good morning. Great to have you back on the program. It's a pleasure, as always. Give us an update to begin with, Kenneth. The last time we spoke, you just got an approval and you were launching those schemes, etc. What's the latest? What's been the response like, and what have you been doing? Interesting markets also to raise money and sit on money.
Okay, we got, since the last time, Prashant, we've got off the ground. We raised a small pool of capital that is there. And it's been our first month of investing and first month of full investment in the portfolio. We've launched a focus fund, like you've known, and we've got about 23 names in our portfolio. It's a suite of products and as per a suite of companies, and it's very focused on to what we think will emerge over the next year or two. Okay, chief amongst them is our focus on the pharmaceutical business, and these are largely in the generic spaces of outside. There's a reasonable opportunity in the India infrastructure space, and also in the energy space in India. So all of this put together, along with manufacturing, which is reasonably large, would be about 50-60% of our portfolio. So that's the update, which is there as of now.
First full month of investing, 23 stocks in the portfolio,
That's
and
right.
50-60% of the portfolio made up of India generic pharma companies, right? Supplying to US, etc.
That's right.
Okay, infrastructure and manufacturing were some of the others
Yes.
that you mentioned. Okay, got that. How much the market is corrected? And by the way, out of these 23, this is all large caps, Kenneth? Are they sort of market cap wise? Where do they fall?
So we got 50% in mid and small caps and about 50% in the large cap formats currently.
And did you buy last week? Were you sitting on cash and then this correction came, and were you buys after?
We participated. So we have, the portfolio did correct in line with the market. So we are not really in isolation, but this is just a construction phase of the marketplace. So if I just step back, you just need to also realize that we come out of a fairly profitable 2023. And 2024, the last time we had this conversation also, we were fairly, our best case scenario for 2024 was a marginal return or a flat return for 2024. But we need to look forward from that. I mean, let's put it this way. Markets are expensive, whether it is at the top end of the market, which is large caps, mid caps, or in the small cap space. There was something happening in the mid cap and the small cap space, which was completely unexplainable. And I think that is winding down right now. So closer to this end of this year, I think we will be able to format ourselves into what to look forward for 2025. It is not that profitability is not growing. It's not that the opportunity is not there. But if you continue to focus on what's happening in the marketplace in the immediate time, I think you'll lose focus of what could emerge into the next year. And 2025 is, our sense is it could be fairly robust.
Okay, got it. Kenneth, hi, good morning. I wanted your thoughts because, these stocks are now seeing some momentum. The auto names, right? The government is very keen on electrification of vehicles. They've come out with several initiatives, not just for global OEMs to come and set up shop here, but also for like PLI benefits for the local manufacturers as well. Do you think that this space is now going to see a structural up move? And is there more to go for some of the large incumbent players?
So I use a slightly broader brush for this, right? You said all the words out there. Okay, it's a focus by the government. There's a lot of PLI schemes that are there, and all companies are eligible for those benefits. Now, this is not the only industry that has done so. It's happened in electronic manufacturing. It's happened in pharmaceuticals. It's happened in chemicals, and you can go backwards and you see virtually every industry has gotten some level of stimulus from the government. Now, this is basically what would play out between 2024 to 2030. At least in the first couple of years, till the industry has been able to finalize technology and put in a product into the market, profitability is dependent upon incentivization by the government. And once you hit scale production, I think then it's left for your competitiveness and your customer-facing businesses to actually deliver the profitability. So this is the case not just with India, it's the case across the world. So this is one of the biggest thematics that is playing across the world, which is incentivization of manufacturing, is essentially to bring business back home and drive that opportunity to make sure that you, as a country, whether it's India, Middle East, Europe, or the US, you are very self-dependent on the internal structures. So yes, there are opportunities. The size and scale of these benefits are reasonably large. And once we've been able to hit critical sizes, a country like India will hit critical size very fast because we've got a very large population out here, which is also a consumption base, right? So I think that's thematically how each of these opportunities will play through right through the end of the decade. So I wouldn't stop at automotive. I'll just look at every industry who's got benefits across the board.
Kenneth, so 50 to 60% of your portfolio is in pharma, infra, energy, and manufacturing broadly. How would you like to construct the balance?
We've got a commodity exposure, and I think that's something that I have mentioned it, but we probably not there in terms of how these stocks have done, at least in the near term. But going into the next couple of quarters, or maybe the next year or so, I see commodity prices bouncing back. Now, this has got a couple of situations that will have to emerge for this to happen. Primarily, commodity prices have to go up, whether it is soft commodities or whether it's metals or anything in the intermediate, including chemicals. And this will happen because supply will get constrained or the price points internationally will go up, which is effectively inflation. Okay, so we see demand coming through, and the demand is driven by governments. It's a marketplace, or it's an economy across the world which is driven by B2B businesses and B2G, which is business to government. Okay, and that's essentially where all the volumes take place. So we've been in a corrective so far as commodities are concerned. Most of that correction if it's not already over, should get over the course of the next quarter or two, and we'll have to see how that emerges into the next year, which is 25 and 26, to see how some of these behave. So that's why we're building up our portfolio and through the course of the next couple of quarters. That's how our portfolio will emerge.
Sorry, which commodities are these, Kenneth?
In
particular?
paint them with a broad brush. It will obviously the basic commodities of metals, okay. Anything that's led to infrastructure, and everything that is there which is in the soft commodity space or agriculture commodity space.
Yeah, no, actually I was coming to agri because that's been a long favorite of yours, right? Although I don't know if performance-wise has that played out to your expectation, or you think it will now?
No, I think the focus here is across the board. I'm not going to restrain ourselves to just one part of the piece. Till now, agro commodities, whether it is agrochemicals, fertilizers, seeds, etc., they've been reasonably subpar in terms of performance, but they've been okay as far as the index is concerned. But to get that right, I think we need price inflation that comes back.
Okay, just a question on the larger view of the market, given that we, come April 15th, we'll be talking more about elections. You have the first, the start of the US Fed rate cuts as well that could take place from the next policy onwards. How are you approaching the markets now? Do you think that this could be a phase of a painful time-wise correction in the market rather than a price-wise correction? Because that's something that a lot of people are now talking about.
2024, I have very little expectations. Like I said, our best case is that you get a single-digit return, or it'll be flat. And I think that's how we're approaching 2024. 24 from. And like you also mentioned that there are a lot of events that will come through. Now, all these events are events, and when you see it, what happening on the business side is linked to just one situation. How do individual companies get self dependent? Okay, and we've seen a structural shift towards I mean, whatever the outcome of the elections are, we're seeing a structural shift towards tariffs going up in every single region or every single country. How that is going to play out is going to be a question mark. What are the trade realignments that are going to take place? How much as individual countries, who's going to benefit? I'm sure we are one of those economies which are still low cost in terms of manufacturing that has a leg into all of these opportunities that are there. So I'm not I mean, I wouldn't worry too much about 2024 and 2025 also. But
Oh.
and there's one single thing that is very different this time around compared to all the sell-offs that we've got in the past, right? And I'm not that I'm saying this is a sell-off. Is this time around, companies are got a lot of cash on their balance sheet and are ready for the next cycle.
Correct, correct. Got that. Understood. Thanks a lot, Kenneth, for joining in. Appreciate your time here and hope to see you again very soon. Well,